Okay, so the next CPI report is this upcoming Thursday along with PPI on Friday, and this is an incredibly important release for market activity. Generally, with all the different inflationary reports and market activity and economic data we cover, the CPI reading is usually the biggest reading that causes some of the most volatility and the most interest from retail and other traders. Now, you can see this upcoming CPI report is expected to show at 0.2% for core, and core excludes food and energy, so this is not including essentially gas and energy prices. And again, they're expecting it to go up 0.2%. The base CPI is expected at the exact same thing at 0.2%. And so both of these are expected at the same, and we'll see what the readings show up as. You can see the yearly CPI is expected to increase 0.3% relative to the last one. The last one was 3%. This one's expected at 3.3%. And for core CPI, that's actually expected to go down a little bit from 4.8% to 4.7%. And again, this is a really important release along with Friday's PPI report. You can see the producer price index, which is the other side of the inflationary coin, is dropping on Friday at the same time. Again, expectations for that are 0.2% as well. And so the thing I'm seeing from this report is that almost everything on the month is expected to increase 0.2%. And so we'll see the discrepancy between the expected numbers here and what actual numbers show up on Thursday and Friday. But a lot of them are expecting 0.2% on the month. Let me know in the comments below what you think they're going to show up as. And again, the big story of the market with this CPI report is, will the market finally start to pull back a little bit? You know, if we look at the last CPI report that came out on July 12th, you can see we actually got some pretty good bullish activity from this report. It dropped at 8:30 Eastern Standard Time right here, and you can see the big upward movement that happened after this report dropped. And really, if we keep going back here and we keep looking at everything that happened, you can see the market pushed up pretty heavily after that CPI report. It does renew some optimism when CPI does not come in super high. You know, we want this number to be low if we want inflation to go down, which I think most of the market does, and a lot of the market is fearing. And so it really is this balancing act for the Fed where, you know, they have the FOMC rate hike decisions. A lot of people are expecting a pause for the next rate hike, but they're expecting another rate hike in September. And so this inflationary data will influence whether the Fed decides to raise rates or not, you know, how much they do decide to raise rates, if they raise rates, what their plan is in terms of monetary policy being hawkish or dovish over the rest of this year. And it's really important to pay attention to, not just in short-term price activity, but also long-term financial policy. And so again, you can kind of see since the last reading, the market pushed up a decent amount and then pulled back some. We're still green relative to the last release. You know, if we look at this, you can see the last release came out right around here at 8:30, you know, right around here, and you can see we pushed up some, pulled back a little bit, but we're still well above where we were. And yeah, you can look at the government website here and see that again in June we reported about 0.2% for CPI, consumer price index data, and that caused that upward reaction. I believe the expectation was 0.2%, but over the last 12 months here, you can see energy has actually decreased in price a significant amount, and that's what I've been seeing on my end as well. You know, I can remember a year plus ago, gas prices were like $6 or $7 a gallon here in Texas, and I know we've seen a noticeable decline in that, and so that's a good sign. Everything else has essentially gone up. You can see food is up about 5.7% over the last 12 months. All the other major categories, excluding food, are up about 4.8%, and everything included here is up about 3%. And so again, let me know your thoughts here. Let me know what you think we're going to see for the rest of this year and bleeding into next year, whether you think we're going to continue to see increases in price, which is the natural state of, you know, markets. You know, prices tend to increase over time, but this energy going down is a good move, but I do think we need a little bit more if we're ever going to hit the 2% target for the Fed. You know, I think we are going to need to do a little bit more damage to CPI inflation. And again, this will be a really important tell this upcoming Thursday and Friday for PPI. And so if you haven't already, hit the subscribe button, hit the notification bell. We did finally get funded last week. So we finally got funded on Top Step. It was really great. We're definitely pumped about that. And we're working on getting funded in another account as well. If you want to check that out, link is in the description. They are a sponsor of mine. And with that said, I hope we have a really good day Thursday. Let's hope the market pushes up. Again, let me know what percentage number you think CPI is going to show up as in the comments below. And again, subscribe if you haven't already. We cover all the major economic data right here. My goal is to create a free resource for traders where they can find economic data, they can find stock market news, all for free with no paywalls behind the content. And so check it out. Be safe. I'll see you guys on Thursday.